In the meantime, some of the top moving stocks in today's market. Jenny Horne's with us, markets correspondent on Schwab Network, and we are taking a look at Zscaler. And tell us your thoughts here as we are watching this stock.
Well, Nicole, I will say that this morning when shares were down and was 7%, it was like, okay, so guidance and the focus on cost, and that's perhaps why we're seeing this selling. The stock has been on a tear this year, but now that we've seen some of that selling erase on the session, it's sort of like this actually fits the narrative a little bit better because they did beat on pretty much all the expectations as far as the street went for their third quarter. We saw they reported revenue that was up 40% from a year ago, coming in around $497 million. On adjusted earnings, that also was well ahead of the 49 cents expected, coming in around 67 cents a share. And billings rose 34% to around $457 million, which was also pretty sizably ahead of the street's expectations. And their CEO did say that in a statement to meet this growing demand, Zscaler is scaling their go-to-market and R&D organizations, strengthening their foundation for long-term growth of their business, which does imply higher costs, and that could explain some of the market's more reserved reaction to these results we got. But now going forward, they did say they expect revenue for their fiscal year to come up better than expected. On adjusted earnings, that's also expected to be better than initially anticipated, and their full year guidance does reflect what has been a pretty strong October quarter, and the better than expected outlook for the January quarter does also imply they can see this trend persisting. So it was a really strong report. Initially down 7%. It was like that didn't necessarily make sense. But cost is one issue where to grow at the pace at which they have been, it's expensive for this company.
Yeah, and I see that price target. Needham has 225, Wedbush has 210. Certainly one to watch, and a winner year to date, up 70%. How about Affirm, the buy now, pay later, as we saw really everybody using this? Not everybody, that's too broad brush, but at least a good portion, and that was up 47% year over year. I can say that. Your thoughts on what's going on here?
You know, Nicole, I've used this far too often myself, and I can understand the ease because it's basically like a checkout option. So you don't even have to have your credit card ready. You just sign in with your account and it works far too simply. So I do feel like everyone's using it because I myself am using it too frequently. And just to speak to that, like you said, it was up over 40% on a year-over-year basis, but some of these Cyber Monday figures were really strong, showing around $940 million worth of purchases on Cyber Monday were made using buy now, pay later, well ahead of expectations and sizably up on a year-over-year basis. But Jefferies today upgrading shares from underperform to hold with a price target of $30 a share, which was up from $9.50, saying the shares are down 50% since their decline we saw back in February of 2022, and many of the factors driving the underperform rating have already played out at this point. They said the upgrade is predicated on recent evidence of stabilizing cost of capital and capital markets activity, as well as some improving credit performance activity and ongoing momentum of the adoption for these overall rates for buy now, pay later. So as a result, I mean, this analyst is just continuing to further their conviction in Affirm. It's amazing to me to see this name, which has touched new 52-week highs earlier in the session, but we're up 219% in 2023. I know this name had been beaten down, but a really amazing performance as well from Affirm.
All right, thank you for that, Jenny Horne. Great to see you, markets correspondent. I saw that maybe almost $1 billion, which you noted, of $12 billion was used on buy now, pay later.